Tell me something good. Hey, it's Eric here with Homebridge Financial Home Mortgage with my weekly update on mortgage rates and the economy for the week ending September 9th, 2022. Well, it's been a tumultuous week in the financial markets and also around the world. Having lived in England for several years, my thoughts go out to the people of the UK as they close the book on the longest reign in their history. Just think of how much our world has changed over the past 70 years. It's pretty amazing. And think about how much our world has changed financially in the last 12 months in the US. We suffered a 30% drop in our GDP as our economy was shut down by COVID, then superheated inflation sparked by massive government spending and supply shortages. Let's be honest, the Fed was super late to the game. They didn't stop printing money until this spring, and by then inflation was already out of control. And as I've said thousands of times, mortgage rates are driven by the bond market, and the bond market is driven by fear of inflation. You can see it in some of the recent numbers. If we look at some charts, and if you look at my printed materials, um, except for a period of quantitative easing during COVID, mortgage rates track inflation almost perfectly. During quantitative easing, QE, the Fed was purchasing up to $120 billion in securities and mortgage-backed securities treasuries every month, which kept our interest rates artificially low. When they stopped that this spring, rates went right back to tracking with inflation. That's actually good news because inflation should start to decline as we get into this fall and this winter. Why? Well, partly it's the math. Every month, when we calculate CPI, we replace the index from a year ago with the current month's index. CPI is expected to be slightly negative for August. We'll know next Tuesday when those stats come out. But it'll be replacing a zero point 0.3 number from last August, 2021. So the rolling index will decrease. And as we get into the fall and spring, October, November, December, all the way through March, we should be replacing larger inflation numbers from a year ago with smaller ones, and CPI will come down significantly. As that happens, mortgage rates will fall. So cross your fingers with all of that. For the week, mortgage rates were pretty volatile, but they ended up flat. Here are the national averages. Conventional 30-year fixed rate mortgage is 6.01%, down just 0.22 from a week ago. 15-year fixed rates 5.29%, down 0.09 from a week ago. 30-year FHA VA fixed rates 5.4, down 0.15 from a week ago. And 30-year fixed rate jumbos 5.08, down 0.12% from a week ago. In other good news, conforming loan limits are going to be going up. Every year around Thanksgiving, actually it's usually announced on Black Friday, Fannie Mae and Freddie Mac announce the conventional conforming loan limits for the following year. This year, there's a little bit of a battle going on that there are a couple lenders that have already jumped the gun, estimating what they think those new loan limits will be, and in anticipation of that. Although Homebridge is not there quite yet, we might join that pack soon as well. The conforming loan limit is expected to increase a little over $67,000 to $715,000 for next year. The conforming limit is important because conforming loan limits allow the lowest down payment, 3% down for first-time buyers, and also have typically some of the best rates and the easiest underwriting types of guidelines. The limits will vary state by state, county by county. King, Pierce, and Snohomish counties will have a higher limit as they're considered a high cost area. Yeah, no kidding. We won't receive those numbers, the county by county numbers, until later in the fall, probably Black Friday. But the current high cost limit for King, Pierce, and Snohomish is $891,250, and I'm sure we'll see a nice boost to that limit as well. I'm available to discuss these questions and always happy to prepare loan comparisons and solve those story problems. Just reach out. You can call me 206-915-3742. You can email me, eric@ericismybanker.com, or look for me on social media under Eric is my banker. You'll find me on YouTube, Facebook, all the good stuff, and be sure to subscribe for my weekly updates. That's all I've got for this week. Hope you have a great weekend. I'll talk to you next week.